Hey everybody, DayTraderRockStar here, and this is the high probability watch list for the first week of April. We're just finishing up March, and I also like to give a big shout out to everyone who's recently just discovered day trading radio or new to trading. We recently just are completing right now. This is probably our last day of the open house we had in March. So we had a trade show and had an open house, and we had a lot of people sign up and to get to see what's behind the scenes of day trading radio. Day Trading Radio is a membership-supported site that gathers a community of traders together. I do a lot of research. We trade together. We have hundreds of traders exchanging ideas. Really great ones posting their trades in different rooms, and then the education that comes along with it. These watch lists of which we trade each week, and we trade together, and all the trade alerts. So whenever we're trading, or when I'm trading, you get those real-time alerts. You get the buys and triggers of everything, which you'll see on this watch list, because this will be the last watch list of that open house. So I want to make sure that this is one of the best watch lists and videos that you could ever watch for trading, because a lot of new traders are just starting off, and boy, what a time to start off. You've just come out of a very bullish market, so a lot of traders who are just kind of getting into the trade for the last couple of years have only experienced this real strong market, and that's happened in the past. Now, the good thing about me is I'd say the benefits, or the I wouldn't even call it benefits, but the experience that I had to go through the 90s. I understand what a bullish market is. I understand what a bubble is. I understand what a disaster and a financial crisis the markets can go through. So there's a lot of things out here that I understand when I see the pullbacks and you see the fear into the market and stuff. Anyway, kind of digressing there, but the important part I want to really get across on this video is there is a method to trading, but if you come in not knowing anything, it is very, very hard. I mean, you're just going to get swung around, and it's just it's almost a psychological yeah, I guess it is. It's just, for me, from what I see over the years and years of trading, it becomes more psychological. But what I will say, there's techniques in here that will not be found anywhere else and can't beat them. The problem is, and if there is a problem, if you want to call it a problem, is that they just don't show up every day. The market, and there's an old saying, the 80-20 rule, you'll make most of your money on 20% of the days that you're trading. And that's true, and that should be true. Now, the key is, only trading those days, right? Because the rest of the time it's all gambling. The market's not giving you a clear signal, so you're in there with everyone else. But when the market does give you a good signal and you can actually profit from that signal, you're going to wait for it over time. If you've been in this market for a long time and you realize something works so well, you start to just gravitate towards it. You start to get addicted to it. You want to feel that rush, and you feel like you know where to get it. You just have to wait for it. So that's what day trading radio is, and that's what this watch list is. This watch list is those high probability setups, those divergent setups, because those are the sure things. If you want to even go that far and use the word a sure thing, but unless the market's really going against you in some kind of newsworthy fashion, lots of times. The majority of the times, a certain technique that I will show you will work out. So we hunt them down. And sometimes, some weeks you won't find any, and that's the difficult part. All right. So, purpose of the watch list: to identify these great setups, and bring you some great education along with that. So we start off usually in the watch list doing what I call a market radar, and this is an overall look, like you're looking at, of maybe what the future could hold in the market based off of just technical levels and chart patterns and technical analysis basic. The thing about this is back in the day, I remember back in the 90s trading, there was certain things that happened in the market with volume and selling and times of the day and stuff, and it was almost easy enough to predict what the following day was excuse me, based on how the close was and where momentum was shifting. In this case, you don't really see those follow-through days, so lots of times we lose that opportunity to say, well, this day is reversed bad, tomorrow's going to get hammered, and then the next day, tomorrow's up. 100 points, and that's what we've been seeing. So recently we did drop out here, and there was trade war issues and fears and stuff. It really put this market in a damper. At this point, when we started getting into that, we were setting up pretty good. I mean, we had these higher lows being put in, and then we dropped off on that news, and we dropped pretty hard, and then we consolidated, popped, then dropped. I really thought this negative day here, this is a real bearish engulfing pattern. And then you can see the next day we kind of just consolidated at the lows, but then Thursday we got a nice pop, so we're rallying back into this. It just shows you that you don't get those follow-through days. And I wouldn't I wouldn't bet the house on any type of big overnight reversal. Things change real fast. Looking at the picture now, if you're not going to go by that, we did leave off with a little momentum on Thursday, a little upside. The bigger picture looks like a nice move down, a little consolidation back up to the 20-period moving average, which is the first thing you're going to be looking for. Second thing you'll be looking for is there's a little gap up here, so there'll be a gap test. And they both come up into that 2680 level. 2680 level is where that 20-period moving average is. So there is definitely a shot of getting back up there, and if this ends up being kind of a flag, bearish flag, and then we roll back over and retest, I think it's going to be based off of news. I think we just have to figure out that news flow. So a pretty hard place to call the market here. I'll tell you, we're oversold on the daily. The hourly here is kind of extended and overbought. So we had a little candle at the end of the day. Having this kind of being overbought, starting to roll over, and having a daily never really getting any upside here, kind of shows a little weakness in this. So overall, my general appearance to this pattern playing out is a little weaker pattern. But I know not to go any further than that, and to believe in that patterns anywhere going to help you out in this market anymore. Only when you get down to maybe those flags on the short-term time frames, wedge patterns. Love the wedge patterns. All right, so let's continue on now. So that's the market radar. The seasonality effect, I think the beginning of April, according to the Stock Trader Almanac, is a very bullish time of the month until after the 15th. So we will look for some strength going into next week after the Christmas holiday. I think we do have some upside. And I think if we get through that, we start to hold this 200-period moving average. I'm liking this. Overall, more bullish than bearish. I think we're going to actually move back up versus taking out the lows or taking back out the February lows. I just because of news flow and stuff, and I think there's going to be some positive stuff coming out, even though everything's so negative now. But that doesn't help anybody, right? So let's go to what helps you. Now, if I were going to, again, I'm going to bring you some stocks here. But my main concern is bringing you the best setups of the divergence setups. I've taken all those years and all the different ways of trading and saying, all right, breakouts, looking for everything. But now I tend to just look for divergences and take those trades. Or in the multiple, there's other what we call playbook plays, lower channel line play, bounce with a stochastic, or a rotation play back to a trend line. But it has to have a lot of things. I really do abide by the HPS methodology, where I'm looking for 3 different indicators to line up, 3 different signals telling me, not just one, not a reversal candle, but I want a reversal candle on the 200-period moving average. I want a reversal and a divergence. And that's what that gave us back here. And this is where we are. We're not seeing anything right now, but we're looking for that in stocks. But excuse me. But what I'm seeing, I can't get that word out. What I'm seeing a lot is the setups I'm looking for are coming in daily, if not at least a few times a week. Are the divergences on the futures, so that the money can be made in this market, even though we're waiting for a really good setup on a stock for a 3 to 5 day swing trade. The short-term action is perfect now. It really is giving us good ranges. The volatility is there to give us divergences, and you're getting some nice moves. So that's where you really want to concentrate, I think, taking advantage of this if you're able to do that. And again, it's the same techniques. It's basically looking for the same divergences. So I want to start off showing you those divergences again. I want to show you some examples of those, and just so you get in your mind exactly what you want to be looking for and why you're going to be successful if you only take those. That's the hard part. I keep on going back. I couldn't stress it more because I keep on repeating it. Over trading, even trading once a day, sometimes over trading if you don't feel comfortable or you don't have something that's a high probability setup. Basically, you're just gambling then. And I understand there's techniques. You could trade with the trend, which I always would do. But I'm just putting in the importance of waiting for that divergence also. Just know that it should be one of your best setups to put in your your toolbox there. So what we're let me see what I'm gonna do right here. Oh, I'm gonna show you the examples. All right. Some of the things you're gonna get are patterns like this. This is a nice low downward channel. This was an HPS setup that we took a couple weeks ago, or a few weeks ago, I would say. The reversal candle and the lower low made us a nice divergence, and our target was hit easily. So that was just an example. Sometimes I just take pictures of all my divergences, so it's easier for me to show them. But this chart here really sums it up. I mean, if we look at, again, like I say, a bird's eye view, and this is only from like the open at 9:30 to 12 o'clock, the first 3 hours of the day. In this first 3 hours of the day, concentrating on the 1 minute time frame, we find that we could identify high probability setups based on the patterns and the stochastics and probably the tradeometer. It looks like we've been tagging this. So whenever there's a circle or a square, that's usually a tradeometer signal, which is a totally different, that's an order indicator. Little bot we have, and that works great. So if I do see that, and there's a divergence right there, and that's that's a perfect divergence. I mean, you need to take that every time. And for scalpers who are scalping this time frame, you're getting plenty of. This is like a 10-point move now. It used to be maybe a 2-point move. Now it's like 5 to 10 points, and then exactly so. And then you had a sell side divergence here, and then you had actually a trend line breakdown. And you have to just take those trades, that trade if you want to take a tradeometer, the wedge pattern tradeometer I would always take, but you always have to take your profits according to the time frame that you're trading. And if you want to, and again, I would say if you find a divergence, you're going to get a bigger move than the average move. And I would always just start off with an automatic stop under the divergence long. At that point, most of the times that divergence will be the low of the day, depending on where you catch it and what kind of pattern you get it in. Lots of times that downward wedge pattern or early morning divergence usually is the bottom. And you could be sitting pretty if you put a stop down there the whole day. But most likely you're probably going to take that divergence, you're going to get a nice bounce on it, 2 or 3 point bounce, and then start to recognize that you're probably going to pull back. Instead of going through the irritation of holding on to something all day and just going, oh, I'm up $200, oh, I'm up $20, oh, I'm up $300, oh, I'm down, by the end of the day, you're just hoping. You take each one of these setups based off that time frame. And then you go up to the next bigger time frame. So then you would, if you wanted to take this longer, and you say, all right, how am I looking? I don't want to be overbought down here and start buying it, so I want to be oversold on a bigger time frame, like a 5-minute time frame, and that would give me more confidence to be long. And when I was long, this would give me confidence to be very cautious. This is a textbook wedge pattern. It wasn't a divergence, but it was probably a triple stochastic setup here, and then a breakdown. Great pattern setup, but look at this, another golden divergence right here. So when you start to see these things play out, you tend to wait for them. It might be a boring day, but this is giving you plenty of opportunities. And again, how do you want to approach this? Do you want to approach it with the futures? Maybe you're not familiar trading futures. Well, there's another way, and I do have a video on the forum how to trade at the SPX or the SPY puts and calls with the divergent setups on the NQ or on the NASDAQ or on the ES. I think this is the NASDAQ actually. But whatever, I usually trade NASDAQ or the ES. So you would use the underlying options. If there was the S&P, you would do the SPY, maybe buy the SPY calls in the money weeklies. So you're getting a nice little move on that. And I wish I had a better chart to show you the relationship between the two. But you could get easy 30% move on your options just off of a divergence like this. Especially if it's you're volatile and in the money and coming close to expiration, and you're right around there. So you start to get some big swings in these options, and these are perfect signals to take those on. You just have to develop your strategy beyond that. All right, so let's continue on. Just another example. What I look for, easy divergence, and when you see a divergence, you usually see a wicked move afterwards. That's a beautiful wedge pattern divergence, and a nice move off of it. And because they always set up and they're easy to identify, and when you identify them, they work. It's perfect. Look at this wedge pattern, perfect divergence. Remember what we're looking for in the divergences. We're watching that rotation of the stochastics, holding above that 20 line on the buy side, and the price is making a low. In this case, your reversal. These are the ones that you're going to make your money by, and this is a great business plan. Again, I love using that word, business plan. Set your trading strategy, your trading plan, your business plan, because this is about making money, and this is going to be your job. And adapt a business plan around a setup like this that gives you such a high probability of getting a positive trade, and then build on it. Build on different time frames. Build on whatever you need to build on. Maybe some other different things to go along with it, or different strategies with calls and the puts. Just develop different ways of making money off of a signal like this, because that is our signal. And you don't have to say, well, I don't always want to go long. You don't. You can take these short also. I just concentrate on the long side because that's the type of trader I am. I'm more of a long side or a bounce pullback player in the bigger trend. If I really thought this market was going to go down and I didn't believe in anything that was going on, I'd probably look for more shorts. And that's just the way people are. But anyway, if I see this rising wedge pattern divergence, a big divergence, the steeper the line, this breaks under 80, this one makes new highs, that is a short all the way. And even if you don't get the right entry, and I took this entry, I took this one, this was one of my trades, you can see wedge pattern tells me we're probably going to break down through it. Whenever we have a divergence inside of a wedge pattern, it's almost 100% that pattern breaks out in the direction it should, that the divergence is pointing. This is a negative divergence pointing down. Great setup. So I would take it every single time. It's a money maker. It pays the bills. That's where you make your money. Here is there's a couple divergences on the 5-minute S&P cash chart, and I always like to reference the 5-minute cash chart for these bigger divergences. So the bigger the divergence, the longer the time frame that trade will last. Because each candle represents a different time frame, 5-minute, 10-minute, 5, 10, 15, 20. So it's like almost a 20-minute rotation before we got oversold, versus a 1-minute chart that happened in 2 minutes. So it gives you a little bit more breathing room, and always important to watch those for this divergence. Apply the same rules, take the trade, and let it ride, and understand your time frame for your exit. All right, and there's so much more little tips of the trade that you'll find on the videos. Just keep them, like I said, even though this is an HPS video, I want to go over some of this and kind of review this because, I want to bring the best there, and you have to understand if there's nothing out there that, causes us to really get excited, well, we have to understand why we want to wait for the best. But I do have some for you today, so don't get scared. Couple that we're in. A great pattern I love to trade is a steep drop off, a retracement back up to the 20-period moving average or the 50, depending. But you can see this rotation, and this rotation gave us this chop around the 20-period moving average. And I started identifying this as a flag. You can see the the kind of the choppiness pullback, but not really taking off. And you can see this is extended. But if you go down here, you can see this is kind of flat. Even though you're seeing it green here, it's closer to that 20 line, and you're not getting a good view because this is just an image of it. But it's on the lower portion of this, really just flat line around 20. And when we see that flat line down here, then this trend tends to be intact, and we look for that downward move, which this did. So just looking at some charts and seeing, all right, we have a divergence, we have that 20, we have a fast flush before that. This all is a formula. This is my triple stochastic flag setup. All right. I'm just taking a picture of, I'm not even showing you the dates or the prices. I'm just taking a picture of IMAX chart and seeing two divergences on it. All right. So the divergences, again, will jump out. There's only way a divergence is going to happen. You're going to have that higher low and a lower low in price, and the opposite for the sell side. And again, here it is again. You can see the results after it, and that's all that counts. It doesn't mean anything, whatever the price is or whatever. The thing is, everything's percentages. You get a good move in a short amount of time. That's what you're looking for. The next slide I had is another great example of that. A breakdown, consolidation back up to the 20, a fast rotation on our fast rotation. This embedded under 20, it's 12. That represents a bear flag, and you look for the breakdown. Great setup. It's one of my favorites. It's called the triple stochastic bear flag setup. And again, these are all part of our trading playbook that goes out to members of Day Trading Radio. All these are the setups that that we want to take. I identify. So let's jump on to it. I'm gonna stop the education part there. We'll get into the watch list, and we'll just take a look at some of the setups going into next week. I have it. Where's my paper? There. I got a list of stocks to go over. Some of them are a review. I did 2 watch lists last week, kind of a part 1, part 2, because the volatility going into the early part of the week, I wanted to let the market kind of play out, and it's really just kept up. The volatility has been keeping up, so it's just harder to, place tighter stops. You have to let your stops get a little wider and stuff, and it becomes a little bit more dangerous. So I've been holding off on some of the setups because I want to reestablish that rhythm that the market needs for us to profit from it. And even before I start that, I push the divergences so much, and again, check out theschoolofstock.com, theschoolofstock.com. I have a great divergence course there. Highly recommend it. I have a lot of students take that. That is everything I know about divergences. And I always add to it, try to keep it up to date on divergence trades that we take, archive. Just go check it out. Just a lot of information in there. Go review it. It is it's a what do you call it? It's a full of lessons. All right, you have to just check it out. All right, so let's get to the watch list here, and I want to a couple of these we touched base on over the week because I put out 2 and these are starting to show up on my list. AbbVie was going to be a 5 to 7 day pullback going into yesterday or day before yesterday. So we did have a little bounce. It started bouncing. I didn't get in it. Today I wanted to do a little bit more research on it, so I looked down there just to see why they gapped down, and they had their cancer drug came back with some news that didn't meet this whatever they need to meet for fast track approval. So AbbVie gapped down, and it's been selling off. So now knowing that's kind of overhanging it, I don't know how important that drug was to them, and what does that mean? I don't know enough about the stock and the company. But typically it's a 5 to 7 day pullback. It's holding the 200 period moving hours, but I want to pass on it. But I just want to update you on that news. Disney here. Take a look at this. Disney, nice pullback. It's back under $100. Well, it's actually right at $100. I remember trading this back here when it was $100 on this pullback. So we're right back down to this band. I remember back here in 2016, it was always around $100 I get involved in this, and I made this band in here representing that area, and we eventually jumped out of it, came back into it, chopped around it, jumped out of it, came back into it now. So I'm definitely starting to look at this. It almost is giving me a divergence signal too. It was this little low here was kind of a higher low. I mean, you can't see it visually, but you can feel that it's there. There's a drift up. And that's not the divergence I preach. But it's reading into the support line. But this is what I got this one. All right, here it is. See this blue line underneath us? It went under here, and here. It's a pretty decent trend line, and Walt Disney holds well to trend lines. I'm going to go out to the weekly here, and you can see it goes out to 2016 through the whole 2017. Perfect. We're right on it right now. I think that's what I was on. And then the weekly is also oversold. So if you're looking at this looks pretty good. I don't think it's an exciting stock, but it looks like it's starting to turn the corner here. And, maybe even a buy stop here above 101.31. 101.31. You could tell that was our area of resistance and support. We broke down through it. We're having a hard time getting back up there. So, I'd watch it. I don't want to chase it at that point on that breakout because we're still, kind of weak here. But what if we drop down a little bit further and put a real divergence? That would be key on this one. This one I'm going to circle it. I'm not going to put a buy trigger in on that one because I think it could be choppy here. It's right at the $100 level. I'm going to watch it. I have it circled as I'll put it up on the screen each day next week, and we'll just kind of follow along. PODD. This is a tight stop stock, insulin pump. And this is just a great, just think about it. Diabetes. It's not going away. This seems to have just been running. This is one of the stronger stocks out there. $86. You can picture this over $100, right? 80 to 100 doesn't seem like a stretch the way this thing is acting. Starting to rotate back. So, you got to like that. Even if it's not a HPS type of play, it's just saying, hey, John, recognize that strength. There's a good shot that it's just going to continue to go higher because the market has pulled back and it has no reason to pull back, apparently. It's just, it wants to go higher. It wants to go higher. POD. Hacked. I started looking at some of the cybersecurity stocks, and I decided, you know what? Instead of taking that one-on-one type of trade, let's just take a look at the ETF. This has a basket of cybersecurity stocks, the ones I pay attention to, FTNT, Fortinet, which is holding up pretty good on that 20-period moving average. Some other ones. FireEye, I don't really pay attention to that one. EYE, I think that was it. That's holding the 50. But getting back to the hack, I think that was a good basket of stocks, and you can see it doesn't look bad at all. This is a nice pullback on this, holding the 50-period moving average, starting to rotate back up. It looks like it's almost bulletproof. Just looks like it's just doing its own thing. And then we're going to just actually start to rotate back up towards the highs. So I think not even getting back up to the highs, you could probably get $1 on this trade. There's a big candle there at 35.10. It gives you about 80 cents, 75 cents. I do like that trade. Heck. I'm going to circle that also. Another very strong stock, and I love it, is Match.com. You can only see this going up, right? I mean, it's online dating. They own all the sites, everything from Tinder to Plenty of Fish to these other ones that are always popping up. And again, you can see by the chart, this thing is pretty strong. It's a nice pullback, holding the 20. It looks like every opportunity should be bought on this stock. So it looks pretty good right now. The hourly here, just maybe one more rotation, maybe double bottom. I don't even know if we're going to get that. MTCH. It's just almost right now we're looking at stocks that are very strong, very safe. It seems to be they seem to be bucking the trend of the market, not really paying attention to them, and those are the ones that tend to be the first ones to take out the highs. International paper, I put it out there this week, just kind of threw it out there in the list, and say if this is a wedge pattern, I'd watch for a double bottom in this wedge. I wouldn't chase it at this point, but you can see what we're looking at here. Good support line. It came down, and we might not get another opportunity. I still think it's bullish here, but I'd always feel comfortable getting I'm curious to see how this wedge pattern plays out. If it comes down and becomes a textbook wedge pattern. IP, that was that. ADM, Archer Daniel Midland. Again, another one that was recently on the HPS watch list. Was it? Let me double check. Maybe that was, hold on one second. All right, I could actually look back at this chart and say, all right, let's follow this chart along. Where would I be in here? And you can see a channel starting to develop, and I follow this one a lot, but I think it's right here where we had this lower low, and this very obvious divergence here in this downward channel line. So whenever you have that, you're looking for that breakout zone here. So that's where that's where our last alert was on this. So just to give you an example, that's what we want to find. We want to identify the divergence, which is here, here. Low. It had a nice bounce off of that. But we're coming back to this after it eventually broke all the way up here, and then we're looking for a pullback to that underlying trend line. So that divergence is going to cause that trend line, this little spike to cause this trend line, a little retracement after a breakout. Everything looks good. So that's why we have the buy trigger there. This is almost what we call a secondary trade. The primary trade would be back here off of this lower trend line, but this is a newer trade of the recent pullback. We keep on going back to the same stocks, but we have to have patience. It might not set up. It might set up every month. There might be a real good setup. And as you can see right now, we pulled right back to that trend line and then popped right up to our zone. This is where we've been chopping around here. So that's why I was looking at it. I wanted to see what it looked like. And looking at this chart, you can see a lot of chop. And if I readjust that chart, maybe we're working up toward this top trend line. It's very bullish. The trend line here is just getting into kind of a power phase. So this does look really, really nice for a follow through. It's one of my favorites. It's not that far off the highs. I think it's going to be a slow grinder up. All right. So just an update on that. I want to put a warning on Joe here. Joe had a nice setup, wedge pattern, but it hasn't really broken out yet. And then today I see news out there that they're putting the cancer warnings on coffee in California. I don't know how that's going to open up and how Joe's going to feel about that on Monday morning, because this is breaking news over the weekend. This is looking like just a boring trade, and if anything, it's just not. It doesn't have the oof. I don't like the news of cancer, being posted on coffee. I don't think that's going to affect it too much, but it might affect the stock. So we'll have to watch it early Monday. Might want to get out of this. The pattern's still there. I'd watch it Monday. All right, let's just do update on that. Someone pointed this one out to me. It was a perfect divergence, and it still holds on to kind of that divergence upside. We haven't gotten overbought yet on the daily, but it's already given you up. You're already kind of broken out of, closed that gap. You've moved up here very close to the 50. Is there enough upside still left in this to kind of get in at this point? Big falling wedge pattern. Probably will see a break of this. Remember, divergences will 90% of the time take you out of the downward channel that it's in. Now, there's two channels here. We have this one channel, which I would consider being taken out of. But there's this big wedge pattern that's playing out. And that brings us up to, 45 area, 45, 50. Actually, Well, anyway, I missed this divergence. Didn't see it. Didn't register on any of my alerts either. So it's funny. KHC, I'm in it. I'm liking it down here. I got beat up in this. I actually had been holding this. I added to it. I got my cost average down to 66.08. It's trading at 62. I'm down about 4 points on this. And yeah, this one, they're expecting it to. They say Kraft needs to acquire someone. Until they do, this thing is kind of dead money. I bought into some weakness. It turned into a little bit more weakness. Now getting that bounce. We'll see how far we can get back up there. I do expect it to get back up above this trend line here. Up above the trend line, which is almost $64. So, yeah, 64 is a good early target on this. 64. Here we have Under Armour. And, very cheap stock. I'm taking a shot on it with some options. Just because the pattern's intact. And I think we could get above $15 pretty fast on this. I think my target on this is $60. It's active right now on the HPS. Let me see if I can show it to you. Not much is coming out of it right now. Let me go back. Do I have Under Armour on this? Yeah, it's active. So here, this is actually interesting because it chopped around here. We put a bigger pattern in. And it hasn't gotten back up above that 1550 area. There's a nice downward channel line here, if you get an imaginary one, from this pivot to this pivot. So we're looking for this definitely to break out. I think that 1550 is still a valid entry zone here. Meaning that if you're not in it, wait for that 1550 to break out. That will bring us through that imaginary trend line, which I'll show you on this one. Yeah, this downward trend line. So that would bring you up here. Definitely a breakout. Probably even tighten that up a bit. I would tighten that up. Probably 15. Yeah, 15. What did I have? 15.15 is perfect. That's good, Johnny. I just checked myself. I like it. All right, so that's still active right now. Still active. Move on. And as you can see, we're not seeing too many big divergences in this market. Nothing exciting. If I even call a best bet, I'd almost do something crazy. I like the Corning down here. The Corning definitely oversold. I've been following Corning for a while. They had great earnings back here in November. It popped all the way up. Then it had some more good. Then something happened over here. They had earnings and it sold off and it shot back up to the 200. Now it's pulled back. Love it down here. Just something about the price level off of the 200 period moving average. It's starting to turn back up. So I picked this up, added to this on Thursday. So I'm right in that 28 area. I do like it. I do like this Corning, just on valuation, just on trading it, knowing where levels are, know where the earnings, what the projections were. I think it's probably going to end up being a bargain back down here. There's no technical levels to really put this out there. There's no divergence. It's kind of flatlined. We are getting a little divergence signal on a mathematical basis. 60 minutes a little extended. So, nothing really deserves to be on a big active mover for next week. But I do think we are at the bottom here. I think we move up just out of that, everything else that's playing out here. All right, that's off the highs here too. Off of 35 down to 20. So I love the setup here. Probably one of my best bets of the week. All right, after further review of the Corning here, I'm liking it even more. I'm going to set an alert on this for a buy. On an HPS buy signal here for a move above 28.17. So we'll call it 20. Well, you know what? We'll make it pretty tight. 28. We'll make it 28.18. I think that's going to be a good level. It's going to give us a higher high. It's going to give us hopefully a higher low. We'll see what. But we'll be back above this trend line, which was an area that we want to get through again. And from that point on, I also want to point out this back here, February 14th, Valentine's Day, insider buying. Corning director discloses purchase of 30,000 shares. So that was at the $29.47 level. So as you can see, we're actually underneath that. And I just like this a lot. I think we start to rotate back up. We got a little divergence maybe happening. I'm not going to count it, but what I am going to count is that, insiders getting in back here on that first dip. And everything looks good. Starting to move back up. Best bet with a break above 28.18. All right, here's the Corning chart. This is GLW Corning. And again, breakout, buy trigger 28.20, and looking for a move up here. It's definitely getting even though it says 28.25, we want to take it above that high. And I think we get over $1, possibly even $2. But I would, take a good look at it as we hit our profit zones on this. And again, only take this on a breakout of the channel. Now, I did get into, I do have some of this already. I like it a lot. I might add to it on the alert. So I think it's a really good alert. I'll get this on the site right now. All right, we got that up and looking pretty good. I'm pretty excited about that one. The WBT, I always get that. WBT? Well built, yeah. Kind of a similar pattern. I like this one a lot too. My second best bet on the day, and I do believe we are set up on this one already. So it is set up for us. I'll bring you that chart. I'll show you that chart right now. All right, you can see trying to catch a little more downside. I don't know if we're going to get that. I'm already in this one. So I do like it right in this $19, $20 level. If we get down a little bit underneath this, I was just going to give us an alert. It kind of completes that channel. But we might not see that if we actually activate it, because I put this one in midweek. So you can see it actually starting to turn back up on this. So like I said, might not get the buy zone. I would almost just say, I like it here, basically. Maybe we should even, come Monday, I might automatically just initiate this one and just tell you I think the buy zone should be raised up a little. All right, so this is still active. I'm in it, and we've already traded this one once off of this pullback. It was like a 5 to 7 day pullback and a big fast reversal. And again, we're looking for a push back up here to the trend line and outside the trend line. This is a big call on this one. Basically, reverse, just the same type of trade back here. Pulled back, went up, pulled back. We're going to look for the same thing. This kind of consolidation sideways. So I love this one too. One of the best bets of the week, still active. Let's revisit Southwest Airlines. Now, Southwest was triggered as a stop. LUV. I didn't get any on the setup because I had Alaska Airlines. I'm holding, but both the airlines got hit on news of that fourth nor'easter. Right when that happened, the market, the airlines here gapped down. So this was actually working out good. And as I always say, and when we have a great setup, the only thing that we worry about is news. Because news trumps everything, and Trump news trumps everything. But this was just a sector-wide news event that, all the cancellations, all the issues that the airplanes would have over the winter just piled up. And you could see actually we kind of gapped down. I don't know if there was an earnings call here, but they all got hit here. And it came down and tagged our stop. And we were on our way. I think the trade would have worked out fine. But now, it stopped out. It's still good. I still think that's one of the better airlines, and we're going to start to move right back up. Just the nature of the beast on that one. All right, here we have Nielsen, and Nielsen just not performing. We had a channel down here. It looked like we had a good divergence. If you take a look here, you can see that it just didn't do anything. We're still on that line. It did trigger it by a penny. That's just, again, sometimes you put a stop and you'll come down. You really want to close below the stop for that stop to be active. So, we didn't get that move yet. We're still holding that trend line. I'd still be, I'm going to leave it the way it is. It stopped out. I'm not a big fan of this. I have 100 shares of it. I picked up off of the buy trigger, and it's I'm thinking of taking it off. I'm going to wait until Monday and see if we actually hold this stop. If we break down underneath it, I want to take my stop off. I want to take the 100 shares off and move on. So this one is, make or break. If it actually holds this stop, what I'll do is I'll initiate the setup, just so we could use the stop as a good stop out. So that's where it is right now. Just want to show you the Alaska Airlines. Same thing. We had that nice little pop, and then all that news came out, and then sold off, and we came back down under our stop. We didn't quite get to the profit zone. We did get up to a trend line, and good thing that we did. We did get up there, and we did announce that level as being an important level to take this trade off. So you got hopefully you got out of this trade with a nice profit off of that, even though it didn't hit its profit zone. We did take it off into that trend line. All right, so you can see that pickings are kind of slim, but I would consider the Corning and the WBT both actually best bets of the day. The Joe here with the cancer the thing that's coming out over the weekend, we'll see what happens on that. Money might want to get out of that. The Under Armour continues to still be active. The other ones, the WBT, again back on here. There's other ones that we talked about, but we're going to let things set up a little bit better. Remember, the key of this, business is to make money. So you have to take those setups that are going to give you the opportunity, not just a random setup. It's not going into OTB and betting on a bunch of horses and hoping that your ticket comes in. So when we see these signals up here, and you say they're watching, it's important to realize that each one has a certain pattern to it that we've traded before, and it should be taken on the thing. Sometimes you get a stop out, the LUV, news event, the big storm, Nielsen. It's right on the stop right now. Technically, it's stopped out. No excuses. I might get rid of that. And the other ones, whatever comes out, a bit into some weird sectors, the Procter Gamble, and it's still working out, but it's been lagging because all those stocks, the KHC, the Kellogg, the Procter Gamble, and that same sector has been. So that's important to understand that also, and be in the right sectors. We've discussed a lot of good stocks today. Going forward, a lot of strong stocks too. Just to review, the Match.com, the POD. The Hack, some of these very strong stocks have been just standing out, and we expect these to move higher. I will finish off saying that I think the important part is really talking about those divergences and how important it is to take those. All right, and not every setup is going to be on your daily time frame. It's going to be on the multiple time frames. This watch list here goes out for those traders who want to be in a position for about 3 to 5 days, possibly 7 days. Sometimes longer, sometimes shorter, but that's how we calculate, where these setups tend to move aggressively. But everything else goes into trading. The daily setups that we get into, the divergences. Again, remember, always looking for these setups. I'm going to just scroll through a couple more with you, maybe kind of get you inspired to know what we're looking for. And every time I see a good one, I like to copy. You should do the same thing. If you have any questions or anything, you want to learn how to identify them, or you're not sure one, bring it to my attention in the chat room. Everyone does. All right, so it's just that when they start to pop, they'll start popping. You'll see opportunities here, and that's just like, wow, that's an ATM machine. It's any analogy you want to say, because it works. It works so well that you don't want to miss it, and that's what I'm here for. So hopefully we do it together. I'll see you guys Monday. For those out there on the open house, hope to see you in the room on Monday. You can convert, just click on the outside page. You'll see there's actually a couple sales going on. That includes the tradeometer, but if not, just jump on the monthly subscription. One trade here takes care of your multiple, usually multiple months. And we try to identify these trades every single day. And don't want to bring you anything else other than when you see me put a circle up there or take a trade, that's going to be a high probability trade. All right? So that's it. Happy Easter. That's another thing. Hope everyone has a great Easter and a great holiday session. I know as a trader we don't like the long weekends. I know. I'm here on a Friday. It's Good Friday, so happy Good Friday for you. It's almost 4 o'clock too, so I feel like I'm just ending the day, but nothing going on today. Watch the WBT, corny next week. I'm looking forward to a fantastic week trading. And again, thanks to all the open housers. This will be the last free pretty much HPS video you will be seeing on the outside if you do happen to catch this on YouTube or something. All right. See you Monday.